Hey there, and welcome to This Explainer. Today, we're diving into a really fascinating turning point in a business's journey, that natural transition from just doing basic expense tracking to running a full corporate financial review system. If you operate through a corporation, you already know that keeping your records clean is absolutely essential. But as your business grows, well, the tools you use have to grow right along with it. So let's jump right in.
So ask yourself this. Has your growing corporation started to make year-end preparation or just getting general financial visibility feel completely overwhelming? You know, when you first started out, simply jotting down what you spent probably felt like enough. But if you're finding that you're constantly reacting, scrambling to find missing details, or literally just leaning entirely on your memory to answer your accountant's questions, you've probably hit the limit of your current setup.
Section 1. The right first step. Building expense discipline. I want to start by just validating the work you've already done. Look, starting your business with a corporate expense tracker was exactly the right move. It helped you build expense discipline without overbuilding your systems too early on. And a basic tracker is fantastic, right? It gives you a reliable place to record expenses and categories. It tracks the GST or HST you pay on eligible expenses. It flags those pesky missing receipts and highlights items that need your review. It even helps you spot shareholder-paid expenses, so your personal money doesn't get all tangled up with corporate money, and it gives you solid monthly totals. So it is highly useful. But at the end of the day, it's still just an expense tracker.
Section 2. Answering the bigger questions, moving beyond the tracker.
As your corporation becomes more active, a simple tracker naturally hits a wall. A corporation is a distinct legal entity. It's got balance sheets, tax obligations, and year-end accruals. You really have to understand the difference in the questions you're trying to answer now. A tracker answers limited questions. What did we spend? Which receipts are missing? Which items need review? But as you grow, you need answers to much bigger, holistic questions, like what happened overall in the corporation? Where exactly does every single transaction belong? What assets or liabilities remain at year end? And crucially, can these records independently support a clean handoff to your accountant?
Looking at the Built to Thrive framework, graduating to a full workbook means you're moving from the practice layer, where you are really just building those basic habits, into the maturity layer. In this maturity layer of tax and financial discipline, your records actually start supporting your decisions. You aren't just logging receipts anymore. You're reading your numbers monthly, tracking tax exposure, and maintaining systems that run consistently.
Section 3. How the workbook flows. A simple 4-step architecture.
To actually reach that maturity, you need a highly mechanical system that does the heavy lifting for you, and it relies on a very simple architecture that breaks down into 4 steps. Step 1, set your rules once. Step 2, record the activity. Step 3, let the workbook map and calculate it all. And Step 4, review the outputs. It's like a giant funnel, and this structure drastically reduces all that repeated manual work you hate doing. You aren't manually calculating taxes every month or trying to build an income statement from scratch. The system just does it.
Let's zoom in on that first step, the setup rules. Doing this right at the very start makes the rest of the year almost automatic. You basically just define a finite, manageable list of rules for your corporation. Things like your province, your specific corporate fiscal year, your GST or HST registration status and rate, how often you file, whether you use the quick method, and your opening balances if this isn't your first year. By locking these in once, every single transaction you enter later on is automatically filtered through the correct tax and reporting rules.
Once those rules are set, you record the activity. And wow, this is where precision really matters. Activity absolutely must be recorded in the exact right place, because a credit card purchase is vastly different from a credit card payment. One is an expense, and the other is just moving cash to settle a liability. An owner's draw is definitely not a business expense. A shareholder-paid expense is totally different from a corporation-paid expense. And a reimbursement, not the same thing as a salary or a dividend. If you just dump everything into a basic tracker, you blur all these lines. A complete system forces you to separate them cleanly.
Section 4. Outputs and handoffs. What the workbook produces.
When you set the rules and record the activity in the right place, honestly, magic happens. Because the system maps and calculates your data, you instantly get comprehensive visibility. You get your GST/HT summaries and method comparisons so you know exactly what you owe. You get a clear income statement showing your profit and a balance sheet showing your actual financial position. Plus, you get built-in audit-trail support, tax add-back info, and incredibly clean accountant handoff summaries. This completely eliminates that year-end panic.
Your accountant gets exactly what they need, mapped correctly, and it doesn't rely on your memory from 10 months ago.
Section 5. The Golden Rule, a crucial behavioral shift.
Okay, to maintain all this beautiful visibility, there is a crucial behavioral shift you have to make. Every business owner transitioning to a full reporting system must follow this one golden rule. Fix the source entry, not the report. Let that sink in for a second. If you're looking at your final income statement or your GST summary and a number looks wrong, never ever just overwrite the final report. Always trace it back. Check the original transaction, check the category you selected, the GST/HST setting, the payment source, or a timing adjustment. The report is literally just a reflection of the activity. If you fix the source, the entire system stays accurate and mathematically sound.
Section 6. What good enough means, the practical end state.
Now, as enthusiastic as I am about clean records, let's keep our expectations grounded here. We aren't aiming for a degree in accounting. We need to define what the practical end state of implementing this mature system actually looks like. What does good enough actually mean? Well, perfection isn't the goal, consistency is. For your setup rules, good enough means they're just consistent across the board. For activity, it means entries are exactly where they belong, expenses are expenses, draws are draws. For GST/HST, it simply means it's easier to review and remit on time without guessing. For statements, it means you can sit down monthly and clearly review your financial position. And for year-end, it means accruals are visible and your handoff to the accountant is completely independent of your memory. If you hit this standard, you're in incredible shape.
This is exactly why tools like the Small Business Financials Workbook for corporations exist. As an educational framework, it's perfectly matched for this exact stage of growth. It effectively bridges that gap between a simple tracker and a really complex, expensive accounting software subscription that, frankly, you might not even be ready for yet.
So, I'm going to leave you with this final thought. The corporate expense tracker, it was enough for a while, but your business is growing. Are you ready to graduate from merely tracking expenses to gaining complete, calm, and confident corporate financial visibility? Implementing a complete system really is the practical next step to ensuring your corporation is truly built to thrive.
And just before we wrap, a quick reminder. Built to Thrive is for educational purposes only. This explainer does not provide legal, tax, accounting, payroll, GST/HST, software, investment, financial planning, or filing advice. Please speak with a qualified professional regarding your specific situation. Thanks so much for joining me on this explainer, and happy learning.